Hey guys and girls, welcome to this week's episode of the No BS With Birchy podcast. I'm your host, Nathan Birch. This is a show unraveling the truth to the facade of the 21st century when they're exiting the matrix and waking up to motherfucking reality. Today, I want to talk about a little bit about my portfolio and just some of the things that have happened over the course of the last 12 months, and a bit of a review and a deep dive into that, and looking at the good, the bad, and the ugly from it. Because, you know, I hear people, I'm texting someone at the moment that was just 2 minutes ago before going on the podcast, and I was having a chat, and he was doing it a bit tough at the start of the year, right? And this guy's about buying another 3 or 4 properties, right? And it's like, you might go through a painful part of 6 months, and then you go out the other side, and it's like, wow, this is cool. And then, you know, you need to plan, and life's not linear, right? And we always need to make sure we're growing and achieving the things we want to be doing. And last time I chatted to my client at the start of this year, and we just spoke the other day and texting now, it was about interest rates, right? It was about interest rates. And he's like, oh, it was a bit painful, and we'll talk about pushing the rents up. And we pushed the rents up like massively. I think we've got an extra 50 grand a year, 60 grand a year just this year so far. And we're about to refinance and drop the interest rate by about 40 grand a year, right? So 100 grand a year better off just in this year by tweaking a few things in the portfolio. And I said, oh, you'll be right, we'll just push the rents up, this is what we'll do. And he's like, it's okay for you to say that, but you're not living in the pain that I'm feeling today, right? And he doesn't know that I still remember that very, very, very vividly, what from our chat that started this year. And I thought to myself, because I was going through a bit of pain myself with things, and I'm like, and I said at the time, I said, if I am having a great day, right, if you got 2 properties and they're going well then if I've got 200 properties and that's going really well, right? But if you've got 2 properties and they go bad, and I've got 200 properties and they go bad, it goes really bad, right? So, you know, when I get on the videos, the podcasts, the Facebook Lives, or whatever, and I'd laugh and I'd joke about the interest rates going up and all that sort of stuff, that's cool. Doesn't mean I'm not feeling any pain different than anyone else, right? And I play that in my head a lot of the time. It's like, okay, it's just part of the journey and we need to keep tweaking. So today I wanted to, take a bit of a deep dive and talk about some of my growth points of the last 12 months, as well as some of my pain points of the last 12 months, because we're all growing, we're all evolving, we've all got problems, and, just sort of jump into it, right? So I guess some of the interesting things about my portfolio over the last 12 months, over the last 2 years, since the interest rates have gone up, my interest rate's gone up over $930,000 a year, right? So someone wants to sit there and go, oh, my interest rates are killing me. The difference between this one, I want to save $500. Yeah, my one's gone up nearly a fucking $1 million, right? $1 million, right? I could be sitting here going, fuck this, fuck that. The world is bad. I should sell, whatever the case might be. And people do that because they freak out. They haven't got the big picture in mind. There's all different reasons to why. And they're getting into a financial stress. Let me tell you, right, being a property investor for nearly 22 years, there has been lots of ups and lots of downs. There's been times when people go, oh, I've had to borrow, I had to put on a credit card. That ain't nothing, right? I've had to call people and say, okay, I need $500,000, right? I need to sort this out. I've got a problem with the settlement. Times where I've gone, hey, mates, some of my mates are raising 50 grand here, 50 grand here because I've got myself into a blunder, right? And most of the problems that I've ever had in my portfolio have been from me overstretching myself and over pushing myself. But it becomes a sport. It becomes a fun. It's a part of the thrill. It's a part of the chase, right? And the growth points that I've had, and my largest growth has come off the back of the largest amount of pain too, right? So looking at that from that perspective, the interest rates going up $930K a year in the hole, right? Extra expense. And I'm smiling about it, right? Because I'm looking at it because a bigger part of the bigger over picture, right? So if I look at the average rent of $80 per week increase times 200 properties, that's 16 grand per week, or about 832 grand a year. So yeah, my rates have, gone up, but my rents have gone up equally, right? So if I look at the difference, there might be a difference of 100 grand a year behind, right? But we all know what's coming, right? They've pushed the rates too far, right? So on the other side of this, if those rates drop by 900 grand a year, if they drop by 500, let's say they drop by 500 grand a year, I'm going to be 300 grand a year better up, right? And it's managing cash flow across your portfolio. And, But I realized over the course of the last 20 odd years of investing, there's been times where I've been like, let's buy 50 properties, let's do this, right? So yeah, there's been big growth phases and there's been consolidation phases. There's been phases where I've had to shift things around. So looking at my portfolio over the course of the last 24 months, the interest rates have gone up 930, but over the course of the last 12, 18 months, rents have gone up probably about 830. So it's pretty cool. What's happening out there in the finance market? So from a finance perspective, I haven't had a loan for 10 years, all right? And I've been sitting there thinking, some of my loans are so old, they're all principal and interest. So one of the big things of the last 12 months, I was going for a walk with a mate one night. It was like, I don't know, 10 o'clock at night. We're going for a walk, going to the gym, doing a walk. And he asked me the question. I still remember it very vividly. I remember exactly where I was. We're talking about how I bought all these acreage properties a few years ago. I bought them for like $1.5 million. They're negative cash flow, 50 grand a year. They're worth like $5 million. And he said, if you went back, would you have bought all those land? I got maybe like 200,000 square meters of land in Sydney in development, key greenfield sites. And I was like, yeah, I probably wouldn't have. I'd probably just go buy another 200 cheapies. It would have been better. And we had a laugh. And he was telling me how he was doing a refinance. And I was like, shit, like I feel like sometimes like the builder with a half-built house, the mechanic with the half-built car, right? And I was sitting there thinking to myself, I need to go back and look at my finances to see what I can do to trim off some of my interest. So I looked at my interest rates. I haven't had a loan with the Big Four bank for 10 years. Second-tier lenders I probably used up to about 7 years ago. And then anything I've done now has either been cash or been with like a non-traditional sort of lender. So like 12-month loans that roll over, different types of bonds or funds that they get built and, they last 12 months, whatever. And I'm like, even my loans with the Big Four banks, they haven't got the discounts applied to them like they have now. And I hadn't been focusing on doing my tax returns because whatever. So I was sitting there looking at my portfolio and I was like, hey, if I just tweak my finances, I could pull out maybe $50 million loan. Maybe I could pull out, save myself a few $1 million a year in repayment. So one of the big things over the course of the last 12 months, I've been trying to get myself ready for finance, and I'm on the eve of doing that. And I said to you all last year that in this year, I'm going to go out 1 month and buy like 100 properties in a month. And I'm on track for that. I didn't think it was going to happen in the first half of 2024. I see it happening in the second half of 2024. And the reason why I'm really pushing myself to do this is because I see the mother of all booms that are coming on the other side of this. So we've got interest rates in UK, in Canada, in Sweden, have all started changing the reversal in monetary policy. We've seen 2 rate cuts in Sweden at the time of recording this, and New Zealand is on the eve of seeing a rate cut. As of yesterday, you see when I'm recording this podcast, as of yesterday, the NAB in Australia has put out, it was like the top story news on the news websites, that their interest rates for the 3-year loans have dropped by 60 basis points. So it's like over 0.5% they've dropped them by. And you can see that the wave of rate cuts is about to come. So imagine what will happen if I refinance, pull out equity. It's been a really fucking painful task. Let me tell you that. It's a painful fucking task. And my portfolio isn't like two-dimensional. I've got lots of businesses and I've got lots of ways of how I funnel flow of funds. I've got, properties in all different types of categories. I've never got loans on motels. I've got like 30 motels, and I say, here's like $50 million worth of titles. Go get them right. There's no loans on them. And then they're sitting at valuers and they're like, we want to see this. And it's like, you ask me for basically a loan. Each property needs like a loan approval, loan application to it, right? It's painful. But I think once it's taken it to the next stage, I have a goal to get to a billionaire by the age of 40. I wouldn't say I'm on track, but I'm definitely made a lot of inroad over the course of the last 20 years to get there. And it might be 41 when I get there. Who knows, right? But I'm pushing myself to get there. And for me to level up to the next part of the game, I need to change who I am, how I've been doing, all that sort of stuff to tweak to be able to get to the next part of that system. And at no point in the last 20 years of being an investor has it ever been easy, whether it be the first property I bought, whether it be the 5th property I bought, whether it be the 10th property I bought. the 50th property, the 100th property. It's always been a challenge to get to that next stage. And it's always a growing pain, right? It's like you want to be ripped and be like Arnold Schwarzenegger. You're not just going to go to the gym and lift a few weights and go, okay, cool. It's like you need to practice, you need to train, you need to get to that position. And, sometimes it seems too hard, right? But if you rock up, you take that first step, then you go, okay, how can I tweak things? How can I do things better? Whatever. So as an investor, looking at the growth perspective, I'm excited for the next 6 months because I'm going to be, getting my stuff sorted. I'm going to be saving on my expenses. I'll be saving millions of dollars on interest per year. I'm going to be so excited. I won't even know myself, right? But it hasn't just been an overnight event that caused that to happen. It's been, decades. And, what things can you be tweaking in your position to keep improving? That's the question I guess everyone should be looking at. One of the challenges that I've seen is that out there in the world, a lot of people are in a lot of pain at the moment, right? And I say that I'm excited because that brings opportunity, right? Unfortunately, seeing the deals out there, I'd love to have seen a property crash. We haven't seen a property crash. That's how crazy inflation is, right? I'm not going into inflation and the systems and, not going off track too crazy today, right? But you would normally see in a time when interest rates have risen so hard that there'd be pain, there'd be people suffering, whatever. But inflation is so far removed from society. There's so much growth out there at the moment. Properties in a lot of areas have doubled in the last 12 months. So, I guess that's good and bad, right? I'd rather see my portfolio halve in value to pick up more bargains than for it to double in value so I can sit here and say I'm worth more money, right? So just in 2024 alone, the first 6 months of this year, my portfolio has easily added to my net worth position of 10 mil. I've had to do anything, right? 10 mil, right? The average wage, 50 grand a year, 40 years of working, that's $2 million. That's 5 lifetimes in 6 months sort of earned in a net worth position of just my assets going up. But if I didn't do those decisions over the last 20 years, I wouldn't have been in that position to have that happen, right? But the flip side of that is that I see that the market isn't crashing, which is annoying. I want it to crash, but it's not. I didn't think it would either. But on the flip side of that, as we start seeing these rates drop, we could just imagine how the pent-up demand, people coming into the market, new cash being built from the banks and the system, and that's what I'm really excited by. So I think we'll start seeing that happening soon. And there is pain out there. There's pain out there on the streets. Tenants are paying rent, which is great. Just I'd say more so on some other areas, like just the flow of funds, right, in business world. Funds, people desperate for money, whether it be the government, whether it be tradies and stuff like that. I speak to my mates that are builders. People aren't buying them, right? So there is like a seize there in the financial system, which has a flow-on effect in some aspects in my life. But I'd say I've had probably the best year in business in all different aspects, right? But I see that there's pain out there, right? And I think it's important to be diligent and observing that pain, looking for opportunities at all times in that. In 2020, I started buying motels. I saw a post come up on my Facebook from 10 years ago where I said, hey, someone want to rent a motel that I've got? I'm not in this business of renting motels, but I saw Corona happen. I was like, shit, I want to buy as many of those things as I can because they're on sale. No one's using them, right? People are bleeding on the streets. So, I'm not saying they're good investments or bad investments either. I'm just, I'd see what's out there and look at those opportunities. But looking at the whole system out there, there is pain. There is pain, and that has a flow-on effect on all aspects. So I guess the challenges that I see out there, interest rates gone up so high, the rents have gone up so high as well. I'm very happy with the pain. It might be painful for 6 months, might be painful for 2 months, might be painful for 12 months. But on the flip side of this, that's where the growth happens, like after you've gone through that pain. So I think if I look at my whole portfolio, will be, it might have gone backwards, 200 grand, 150 grand a year. over the course of the last 12, 24 months, but over the next 2 years, it'll probably be positive another $1 million on top of what it was positive already, right? And it's just waves and cycles. So I guess my point being is things have been great out there, right? I haven't had to do anything for my portfolio to go up. Everybody's making lots of money out there in the markets. There has been pain, there hasn't been pain, there's been wins. What are you feeling at the moment? What pain and hurt are you feeling? Like, most people are hurting from an interest rate, right? But if you've set yourself up correctly, you can benefit dramatically from it. Last time I saw rates drop, right? I had some people that were working for me, some that are still working for me, which had like $3 million, $5 million worth of debt in their portfolio. On a $5 million debt in your portfolio, if you had to buy that when your cash flow was shit to start off with, you're going to be bleeding at the moment, right? You probably had to sell your properties, whatever. But if you had high cash flow, you had the right assets, your rents have gone up greater. It's not really affecting you at all, which is what I have said for 20 years, doing what I do. But looking at from, if you had $5 million worth of debt and the interest rates were to drop just a measly 3%, 5 mil times 3% is $150K a year. I just drew it there because I was like going through my own head, right? 150 grand a year better off from having the interest rates drop. So where are you sitting at today? How much debt do you have? Have you got enough debt? Right? Have you got too much debt? Right? They're the things you need to be looking at. I'm very optimistic about what the next 6-12 months has, because we're right on the cusp. I'm so excited that they've squeezed so hard the last few years, because the only way they can get through this next phase is by printing a lot more money. Inflation will run a lot more rampant than what it has, and all the assets are going to go up. If you're owning an asset, great. If you don't own the asset, well, you want to get more assets. If you've got too much debt, well, you need to manage your debt. If you don't have enough debt, you need to get into debt. Just reassess where you're at and what you can do to get to the next stage of growth. So I guess covering from my side, have I been buying properties? Yes, I've settled on about 6 properties so far this year that I've added to my portfolio. Some of them are standard little properties. Some of them are big properties like motels and pubs and stuff like that. Some offices that I've bought for my businesses, and basic sort of little normal units, foundation properties in the portfolio. My goal for the second half of this year is to buy 100 more assets. I wouldn't be able to sit here just like, oh yeah, we're going to buy 100 properties in the next month, right? I would never have thought I could have this conversation. But if I didn't do the decisions 10 years ago, when it was painful, when the GFC was here, when interest rates were soaring, when interest rates nearly hit 10%, if I didn't know to do those decisions back then when it felt uncomfortable, I wouldn't have those assets today that have gone up so dramatically. Like, I'm looking at my portfolio when I see into my internet banking, it's like I bought them for 150, they're worth $1 million, and I owe 70 on them. It's like, fuck, there's so much equity there. So just on that front, if you're feeling like it's a tough time out there, keep pushing. If you need to readjust your strategy, reach out to people. If you need to ask us a question, get some advice, get some feedback. We don't give advice, we're not financial advice. But if you want to, someone that's been through different phases of growth, my team, myself, reach out to us, 1300-367-925. Email us at admin@binvested.com.au. And yeah, like, it may seem daunting, right? It might seem that, things are tough out there, whatever the case may be, but it doesn't have to be. And with a few adjustments, you can go from 2 properties that are costing you 50 grand a year to 20 properties that are giving you 100 grand a year, just with a little bit of adjustment there. So if you need help on any of that, reach out to us. We've been doing this for a very, very long time, and I look at this time as an exciting, there is pain out there, but I see it as exciting. Very, very exciting. So yeah, we'll catch up soon. Thanks a lot for watching. Have a great day. And remember to watch us on Google Play, Apple Play, Spotify, and YouTube. Have a great day. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.